All right, guys, what is going on? Welcome back. It's Institutional here, and today we're going to have part 2 series of looking at structure as shifting from a retail concept to SMC, right? Shifting that ideology to now trading as an SMC trader. So there's a couple of things that I want to cover as far as order blocks go, fair value gaps, and looking at order flow of structure, or how the market reacts, right? So for this, we're going to take away the chart real quick, and we're just going to look at we're going to put a little tool here. It's going to be your path tool, right? So I'm going to tell you guys a bit about structure, right? So structure is still respected in terms of a retail ideology, but you need to have context behind it. So what do I mean by that? When we have double tops, if we were to have an area of a double top formation right here, right? We can be looking to target that as a retail trader because price will most likely come back up, and anybody that was looking to short this, if they were able to short this and get away with it, right? SMC does not want these people to essentially be profitable. So what they'll do is they'll bring price all the way down, right? They'll bring price down. Give me 1 second, I'm sorry. They'll bring price down, and then they'll give you some sort of structure that starts pushing up higher, right? And here you can capitalize to break out of this double top formation. But now we need to focus on is what is price doing and these highs that it's making, right? What are we breaking? We have to start breaking structure, but here we need to have some sort of confirmation. So this is now, I'm going to present you guys to what is called as an order block. So what is an order block? An order block is going to be the majority of down close candles that you have before a push up. So if you have a bearish candle here, and if you have a bearish candle here, it's not necessarily going to be the last down close candle, it's going to be the majority of them, right? What you're looking for is for price to have an expansion over here. And then when price comes back down to this area, this will be your order block. And what you're looking for from there is to enter on this order block. But of course, now you need more confirmation. We're not going to have confirmations yet, but we're just going to understand now a little bit of what we look for when we're trading for SMC traders. So again, we're always looking to target liquidity like this. Now, looking at order flow, right? What is order flow? Well, order flow is still, in terms of structure, if you understand what structure is in terms of a retail trader, right? There can be higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. And that's fine, but you have to understand that this can be your bullish order flow where you have an order block here. You have a down close candle, or you have a multitude of down close candles before you have an expansion to the upside, right? You can have something like this, and then you have some sort of expansion to the upside where we have a push up here and we have a push up higher, right? And this right here would be your order block, right? It's the multitude of down close candles, or a down close candle, if you can redefine it to an area where you see that price was, what are they doing here, right? They were accumulating their positions, and preferably where you would see this would be at a level where there was structure before, right? So you have people, you have accumulation, here you have the manipulation, right? Where they have grabbed all the sell side liquidity. We'll go over that after, but basically when people are trying to sell, or where people had some sell limits here and they got triggered in and price goes up higher, there will be an order block there. There'll be something to tell you that price, once it comes back down there, that's where smart money traders were looking to buy, right? So now moving forward, what do we have here? Well, now you could be looking at something different. Here, when price pushes up, it doesn't necessarily have to be an order block here. There could be something of what is called an imbalance or a fair value gap. This is what I trade from, right? So it would be now a gap. So when you're looking at gaps, right, there will be something here that would show you that price wants to go higher. There'll be some sort of formation. So what is an imbalance now? We already covered how an order block is going to be a down close candle, or the multitude of down close candles. What an imbalance would be is when there was no selling here, right? There was only buying. So let's say you have a push up higher and you have another candle that is going to be like this, right? And you have the last candle that's going to be like this, right? So you have the multitude of green candles. And let's say you have a wick right here, and you have a wick right here, right? Well, this right here would be an imbalance, right? This right here. Why is that an imbalance? Because there was no selling there. There was only buying. So this is a footprint that you can use when you're looking at market, right? This would be up close candles where there was no selling here. So what they will do is, if you have the push up here, if this is your imbalance, they'll essentially bring price all the way down here. So they can now benefit sellers, right? So people that weren't able to catch the buy here, since we have an imbalance here and we have price to rebalance this, they have to rebalance this. So market is moving at a fractal type of standpoint, right? They'll come and rebalance that. You can be looking to capitalize from that, right? So now what is an order block? Again, when you're in an uptrend, you're looking at the order flow. So if you're pushing up higher, you need to make sure that something is over here that's telling that price wants to go up higher. Preferably when you're looking at this also, there you have to be looking for liquidity at the top. So there has to be some sort of double top formation that's letting you know that price can start shifting once we come back up to that area, right? And if you get that, then this is when you can start looking at order flow like this. And then now here, well, you can have the same thing. It could be either an order block or it can be an imbalance. But also now the part of that people don't get is, when does price shift? Well, when it shifts is when you start building a high, and there has to be some sort of structure here. Like, let's say we now start making lower highs than this, right? Let's say now price starts doing something like this, but keep in mind, price is fractal. So this could be in the H4 and in the H1, we still have price putting up higher highs, but price are shifting. And what I mean by that, in smaller time frames, you could have structure like this, right? This could be now, let me actually delete this so I can show you guys what I mean. Let's say this is the M15 right here, right? Or this is the H4. And we're looking at the H1 to be looking for a break. In the H1, you will have something going on like this, right? And you will start having a little bit of breaks that start showing you that price wants to kind of start dropping lower. Now, once you get that last push up higher, right? Once you get a push up higher over here, sorry guys, hold on. Give me 1 second. So what I was trying to do is, basically once price pushes up higher, that it breaks out of all these equal highs or structure that you have up here, and then you get a shift to the downside. You get something like this, right? Then now price is shifting. So you have to know that where price wants to go is going to be where? It's going to be down here, because all of this is now liquidity. We're building liquidity, right? We were building liquidity at this area where price was now telling you that we want to go higher. But once we reach a target, it's like a wall, right? Once you reach the target that price wants to go towards, then they'll start shifting the market on smaller time frames. And what you'll be looking for here would be either, a fair value gap or an order block, whatever it is that you trade, right? Now, let's look at another example of this when we're looking at order flow, right? But now let's look at it in terms of the real market and what price can show us, right? So for example, if we're looking at this from a day-to-day basis, right, we can see how multitude in the H4 structure, we start making order blocks, right? These down close candles are order blocks. We push up higher, we make an order block here. So the order flow for now, when we start pushing up higher, starts being bullish, right? But you can see how in smaller temperatures that we drop down to the M15 at these levels, we start shifting, right? We start breaking already out of areas. You can see how the order flow over here has been bullish, 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 bullish. And then we start breaking out of these ranges. So order flow starts showing us that price wants to drop lower. Now we can go over the entry of this. It was SMT, a little bit of it as well, if we look at other things, but again, we don't have to complicate it. But basically, price starts showing you where price wants to go. And we have to understand that all of this moved up. Even if order flow was bullish, it was going to be, again, what? It was going to be liquidity just being induced in this area. So when you have that, you have to understand that all of this, when people were looking to buy, yes, you're in the correct side of the trend for this level, but when price starts shifting, right, when it starts getting to the target that it eventually wants to reach to, which could have been this equal highs over here, right? Or we have some sort of liquidity being grabbed here. So again, same thing over here, right? Look at it over here. What do we have here? We have price order flow being bearish, but like we covered in the last video, they were accumulating, right? But you can still capitalize on the shorts here because you understand what order flow is telling you. But once we reach a target where we have grabbed all of the liquidity from the bottom, then price will show you the breaks, the clean breaks on small time structure, where you have something here to tell you that price wants to go higher. So what is this? This is the famous, right? We have an imbalance here, right? We have a value gap where you could have capitalized from right here. And look at how that works out. And then what does price do? it doesn't come back down to here. It starts giving you again now bullish order flow where you start getting new order blocks, new imbalances here, new order blocks right here, where you're able to capitalize from this bullish order flow that we're in. But once price shifts and breaks out of this, we're most likely going to come back down to grab liquidity down here, because this is where I can see the cleanest level where price is now looking to grab structure. So you're looking at order flow. Yes, you can follow it in the trend as far as looking at structure, but you have to know that whenever we start breaking, you're not looking for these levels like a retail trader. You don't think like, what do I mean by that? You're not telling yourself, all right, this is support right here. This is not support. This is liquidity. You're not telling yourself, this is support right here, right? This is not support. This is liquidity. You're not telling yourself, this is support right here. Again, this is not support. It's going to be liquidity. Why? Why is it going to be liquidity? Because retail people were still able to capitalize here. Even if you have short-term purges, not retail, sorry, the banks, people that want to hold these for a long time, right? There was a lot of accumulation happening here. And then what they want to do, the other ones, they don't want anybody to profit. So they'll go ahead and grab it on both ends. You can't really swing trade this, right? You're not looking at swing trade. You're looking to look at the day-to-day basis with the order flow. And then if you understand order blocks, if you understand value gaps, and you see what price is telling you, right? You have here a multitude of down close candles. So what is that? This is an order block, right? This is an order block where price rejects it and goes higher. What do you have here? You have a fair value gap. You have a gap right here where price has gone higher. So you're following order flow to some extent. What do you have here? You have a fair value gap and you have an order block. So you have double confirmation to look for price to go higher. So yes, you can follow retail ideology as far as what is support and resistance. Well, not that, but what is the order flow doing as far as what is higher highs, what is a higher low doing? You could follow this, but you need to have context behind it. And you need to know that these will be order blocks or fair value gaps. And once we start breaking here, then we need to understand that price will completely break this, and none of this will be respected if we already mitigated it once. So what is a mitigation? We already tapped into it once. If you look at this, we tapped into this, so it's already mitigated. We tapped into this, so it's already mitigated, right? We tapped into this order block, so this is already mitigated. We tapped into this, so it's already mitigated. So we already grabbed the liquidity or the orders that somebody was looking to do, was looking to grab. So all of this right here is no longer valid. This is not any more support. So you take that out of your mind and you look at this as levels where price can start giving you something where you can capitalize from the short-term prices dropping, right? So again, a little video. I hope it wasn't too complicated and it was a short one, but just to show you guys a little bit now about how we're supposed to be looking at price and a little bit about some mitigations as well. When there's an order block and price has come back down towards it and has already grabbed it, you can count that as a mitigation, right? This down close move right here, price comes up higher. This is an order block on the H4. So price comes over here and it mitigates to 50%. And you can see it goes up higher. So we'll go over 50%, so we'll go over premium discounts, all of that after. But again, I want to try to make this a little bit as simple as possible. So if you got confused a little bit about mitigations and looking at structure, all I want to tell you guys how we can not complicate it is understand that structure can still be seen like this. You can still have higher highs and higher lows, but you need to have context behind it. So what I mean by that, once again, there needs to be something at the top that is telling you, oh my God, I'm sorry guys. I don't know why my computer is doing this, but let's delete this real quick. Give me 1 second. So again, higher highs, higher lows, they're fine, right? But there needs to be something at the top that has context behind it. What are you aiming for? Where is the magnet reaching towards? So there has to be some sort of liquidity here, right? Whether it will be a double top, whether it would be a rebalance of some sort of fair value gap, there has to be something that you're targeting. And once you reach that target, you want to start looking for now the structural breaks, right? And looking at that in smaller time frames to start showing you that price wants to go lower, right? It wants to go lower because now we have already essentially grabbed all of the liquidity that was pending at the top. I'm sorry, I can't find this. So once you come up higher here, we want to look for small time frame breaks where we have now breaking structure since we have already grabbed all liquidity that was here. So once you grab that, we'll be looking to shift the order flow like this. Now, this will no longer be valid. Why? Because these order blocks over here, or these fair value gaps that were being created, and these higher low points, right? If you want to look at it like that, they have already been mitigated. So they already tapped into it once, two, three. And the more that we tapped into these levels, the more that this starts being made as liquidity. So this now, look at it again, look at it like in terms of a magnet, or this is money for us. This is money for the smart money trader because we understand that people will be looking at this as trend lines. Now people might not have the correct context of it. And again, as smart money traders, you could capitalize on this if you have the correct context of what was happening here. The order flow for here was bullish. The order flow for here was bearish. You can capitalize on this, right? There's still lower highs, but look at these wicks that we made. So on these wicks, you're able to catch these moves, and the retail trader is still getting stopped out. But the bigger people that are trading here, guess what? They have their orders still here. Smart money is still trading here, but the algorithm doesn't want them to profit, so they'll bring price back up to grab all that liquidity. And same thing comes for here, right? The retail trader wants to long here. They're accumulating their longs. What does smart money do? They'll bring price down to gather positions, but the more that they do that in these wicks, right, the more that price is accumulated in these levels right here, right? Double bottom right here, grab all the liquidity, but all of this has now been mitigated, right? So now they will use this as levels where price will most likely drop down towards and grab all of that liquidity over here, right? So again, where did we reach to? We were bullish till we reach a certain target over here where price can now start shifting. What does price start showing us? Some shift on structure in smaller time frames where price now starts grabbing all the liquidity and starts dropping down lower. So we do not look at this, again, we do not look at this as support or resistance. We want to short this whenever we get a drop down and we start looking at this, there'll be something here. So what is this right here? This is an order block, right? So instead of looking at price like a retail trader, of looking at this as support and resistance, if you have context behind it, that you understand that this will not be used as support. Why? Because we have already mitigated price. Before it was quote unquote support, but because we hadn't mitigated it and because we had a target to reach. So again, once you start looking at this, this will not be used as support. Why? Because again, we're reaching now the liquidity that's resting below. So again, I hope you guys got a little bit from this video. Just a little bit lesson of it, looking at order blocks, we'll go more in depth into it, looking at fair we'll go more in depth to it. We'll get into mitigation blocks, breakers, all of that, but just a quick rundown of how we start applying market structure and how we can start looking when price wants to shift and how we can apply it all together to now get a better perspective of what the market is telling you. All right. Hope you guys got a little bit from this video. I will see you guys in the next one, and safe trading, guys. Take it easy, okay?